Carl, thanks very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The state of stocks as the markets truly get back to business in the new year. We will trade it with the investment committee, of course. Joining me for the hour today, Joe Terranova, Steve Weiss, Jim Lebenthal. We'll, of course, get to all things markets in just a moment. Talk about the markets, guys, as we really feel like we're getting down to business now for 2026. So stocks are higher. We know that. There's your look at the market picture here just past 12 noon in the East. Dow is a record high today, good for 750 just about. That's 1.5%. Risk assets, for the most part, are rallying. Bitcoin is higher today. A lot of people have their eye on the energy markets. What say you about these markets today?
And safe havens as well, also rallying when you look at precious metals. So it's an interesting blend of both. I don't think it's a referendum on the entire year. I disagree with that premise where, you say, okay, what you do on the first day of the year kind of sets the tone. But it is an extension of the sentiment that we had in the fourth quarter, where we believe that looking into 2026, you would have a strong degree of optimism surrounding Fed policy, surrounding earnings growth, and the ability for the market to broaden. And I think that's what's reflected today. You're seeing the broadening in the market. The one sector that I'll highlight is the financial sector. From my perspective, that financial sector really benefits from the confluence of tailwinds that didn't exist previous to 2025, from the introduction of the regulatory reform. And for those that were concerned in the fourth quarter about valuation being the obstacle, the sector itself, from a valuation perspective, is appealing.
Yeah, well, record highs today. On that note, for Bank of America, JP Morgan, Goldman Sachs, Wells Fargo, Morgan Stanley. Kramer was talking about it earlier. Weiss said this is the group to own. Speaking to the banks, says they're cheap. Pointed out JP Morgan at 16 times earnings. They're going to report earnings in about 10 days or so. Leslie Picker pointing out today that the big six U.S. banks added an additional $584 billion in market cap combined in 2025. There's a positive note today on Mike Mayo looking ahead to earnings. Is this the place really, as Joe's pointing out, to keep your eye on here in the early part of the year?
Yeah, I like the group, and I've been saying I'm looking for an opportunity to buy Citi or Morgan Stanley, and JP Morgan's recently come into that because I do think it's cheap despite the major move all these companies have had.
Goldman's up 8% year to date. And 1.5 trading days.
Yeah, and as a result, and because of what's happened on the other side with the metas, which have recovered nicely, but not back to their old highs, my two largest positions are actually Goldman and Taiwan Semi, which we'll talk about later. So they will benefit because when you take a look at private equity and how they've had the gates in terms of not being able to come to the market with IPOs and even with secondary transactions, I think the floodgates do open.
Yeah.
And I also believe that while we see some headlines about big M&A deals, but we're going to see a lot more M&A, particularly with a less restrictive regulatory environment. So this is panacea for the banks. And when you consider how their balance sheets are in better shape in terms of protection from downside than they've ever been coming out of 2008, I think that this is the place for them, and you'll see a continued re-rating in terms of how they're valued.
52-week high for Citi, so it's joining the party as well. Jimmy, that's the highest since November of 2008. That's the stock that you have liked the best in the group. You own JPM too, but that's the one that's done quite well. You can take it from any perspective you want. I'd like to just, through your eyes, what you're thinking about the markets today as we embark on a new year. We have the Venezuela situation to keep an eye on. And as we think about what these markets may do and what stocks could deliver in 2026.
Yeah, I think the core principles here, Scott, are you've got a rapidly growing economy. You've got inflation that, while not at the Fed's target, continues to come down. You've got a stimulative budget bill, and all of this comes together, not to mention deregulation. This all comes together to see profits growing possibly 15% this year. And that is a growth rate that absolutely can support the 22 times multiple on the S&P 500 and grow the equity markets modestly from here. But I do stress the word modestly because I don't think you're going to get multiple expansion. So in terms of where we believe you're going to see the best bang for the buck, we're not saying sell technology, but like Steve and Joe were just talking about, we do believe financials, we do believe healthcare, industrials, and I'm going to dare to say energy, which we'll get into, I'm sure, in a moment, Scott.
Yeah.
But we wrap this all up in my saying that the equal weight S&P 500 is something that we are recommending our clients have in their portfolio. Now, this is not just sort of licking our finger and sticking taking it in the wind. We see earnings growth in the other 493 stocks besides the Mag 7 actually picking up and growing more than the Mag 7 by the second half of the year. And that is the fundamental reason that we think the equity rally will broaden.
We agree with that. I mean, that's the Yardeni, the Ed Yardeni perspective today is very much that, as he cites what he calls AI fatigue, says it's mounting. He likes exactly what Jimmy's talking about. Financials, industrials, and healthcare, especially biotech, bullish on gold. Now recommend market weighting rather than overweighting information technology and comm services.
Yeah, I'm not so, look, I was pretty bullish in my opening comments about financials. However, overall in terms of the market, there are a couple of questions you have to ask. The first is, how much of everything you said as the bull case and the tailwinds has already been pulled forward into the market? None of those are secrets, right? That's what I think. So I think you have pulled through demand. And then the second question is, are we having, and I'm not saying a bubble's about to pop, but I do think there's a part of the market that's not completely rational. And to me, that's no more evident than what we're seeing today with oil and other factors. I don't see fatigue in the AI trade. I'm taking a look at the knock-on effects of the AI trade, which like FTAI, which I own, which is up nicely again because they're going into generators.
But which part of it? But you just said part of the oil market's not rational the way it's reacting today. In what sense? In the sense that
a few ways that we're going to, that you've underspent markedly on the Venezuelan oil infrastructure. Now, it's going to take a while to bring all that out of the ground. But when you do, that's going to mean more oil. We're already in an oversupply situation, and we already have OPEC committing to further raising quotas. And we may, in fact, with Venezuela being part of OPEC, I don't know if they'll stay part of OPEC if the U.S. has influence. So what I see is more oil coming to the market, which should pressure oil prices. I've got the USO, for example, which is not the best example, up 1.6%. So to me, to buy these oil stocks now, Chevron, you could argue, right? Because maybe they get the assets back. Maybe they're the most dominant there, and they can drive greater value from assets. But overall, oil prices I see going lower.
Sure, but Joe would tell you that all energy stocks are not created equal.
No, they're not. So
I think that's the way that he would
right.
approach it. If you look, Joe, at the refinery stocks, for example, and we can cycle through any number of them, the Valeros of the world and some others, that you will see outsized gains in those names relative to some of the others.
Well, the slobs or something.
Let's go through it, because I agree with you. I think this means more supply, and this pressures the spot price of oil. But this is about profitability for the energy companies, about an existing presence. So look at oil field services. Schlumberger has the largest presence in Venezuela. You're seeing, obviously, they're well positioned. You're seeing a significant appreciation there as well. You have Halliburton, Baker Hughes that will also participate. But this is about the fact that what Venezuela produces is heavy oil, very similar to what's produced in Canada. So if you look up at Canada and you see today the performance from a Suncor or Canadian Natural Resources, those stocks are down today. BP is down today. Here in the U.S., Diamondback, ticker symbol FANG, that is down today. So this is really about the ability to be profitable in Venezuela, which the refiners can do because heavy crude trades at a discount to light crude. And if you have the ability to efficiently produce that heavy crude, you're going to be more profitable. And that's where Valero is really well positioned in this regard.
Joe, I was in Marathon Petroleum for many years, and I'm going to dare to say I know a thing or two about refineries. It's been 25 years since we've had meaningful Venezuelan supply. 25 years during which the refinery complex, and Joe, I know you know this complex well as well, has adjusted. Because in the late 20th century, it was always oriented towards that heavy tar-like crude coming from Venezuela. In the last 25 years, they've modified the refineries to run a lot more of the light, sweet stuff that comes out of Texas. Now, I'm addressing this from the perspective that there's going to be some flood of oil from Venezuela anytime soon. That's not going to happen. It's going to take years for that infrastructure to get back in place. So it's really, it's a
despite
canard.
some of the hyperbole from Washington.
Thank you. But
it's a much different picture.
You know what's
much more
not
complicated.
You know what's not hyperbole? is to say that the energy sector has actually been a fantastic place to invest for many years. And I think it's gotten a lot of negative attention. People haven't felt that. But if you look at the last 5 years, just take the XLE before we even get into picking stocks, whether it's refiners or ExxonMobil. Take a look at the XLE. All right, that is up about twice what the S&P 500 is up over the last 5 years. That's a total return. And that's something that people haven't talked about, mainly because you go through periods like mid-23 through 2024 where it doesn't do that much. But this is the ultimate long-term investment. And as I've said all along, and I'm going to say it again, the place to start if you don't own energy is ExxonMobil. That stock over the last 25 years has returned 250%. The S&P has returned 98%. It's right there in front of your face. Speaking
of the S&P, as we look at the market sort of as a whole, we finished the year kind of a whimper, right? Despite some of the thoughts that you're going to have a nice run into year end, you're going to have this Santa Claus rally, et cetera. All that being said, we're what 85 points from S&P 7,000. So as we watch that, Jonathan Krinsky today with an interesting note says the S&P needs to close today above 69.09, spot 79, to avoid a negative Santa Claus rally. The last 2 years were also negative, he points out. There has never been 3 straight negative Santa Claus rally periods. What do you make of that?
I wonder if you apply that to the S&P equal weight if you would have the same scenario, and I suspect you would not. I think what Jimmy pointed out earlier, where there is a little bit of a pivot in the direction of the S&P equal weight, and obviously I'm speaking from the perspective of my own book because it benefits Joe T being an equally weighted ETF. But I think that's what's happening. I think we're seeing this pivot to the broadening out narrative benefit the equal weight. I don't think that's at the detriment of your NVIDIA or your Amazon or some of the Mag 7. I just think that the market's going to find other opportunities elsewhere, and it looks as though the turn of the calendar is being greeted with capital coming into the market that maybe was sitting out a little bit of the last half of Q4.
Well, I mean, the Nasdaq's still up 200 points today, which is
and
just shy
again, that
of
is
a
largely attributable to what we're seeing in the semis, and we'll talk about the dramatic divergence in performance between semis and software.
Yeah.
And I anticipated something completely different. I was wrong in that regard. I thought you'd get mean reversion, but it's the semis that's really powering the Nasdaq higher. And one other point on that, on Friday, if you think about the performance of semis, it was actually remarkable to see that the Nasdaq was actually able to not be down even further than it was on that dramatic reversal that we saw. Semis have been the story in technology.
There's a heavy narrative weighing on software.
Yeah.
Jim said it this morning, Kramer did, software stocks just don't stop going down. RBC with a note today that AI is the death of software. That narrative still remains. Yes, they have favorite ideas, which are owned by some on the desk and some wherever you're watching, whether it's Microsoft or Okta or ServiceNow. The fact of the matter is, if you look at the performance of the IGV versus the SMH in 2025, it is a beatdown, okay? It's like the Jaguars versus the Raiders, okay? IGV up 5.5% for 2025. The SMH is up 49%. Yeah. Does that mean revert in 2026, or do we still have a overhang of the narrative that we just said, that software, AI is killing software, and stocks like Salesforce, ServiceNow, and some of these other names just can't get out of their own way? Adobe, for example, and others.
Yeah, I think Adobe was downgraded today by...
It was downgraded today to hold from buy at Jefferies. Target to 400 from 500 on lack of catalysts, right? What's the catalyst to bring this group
and that's
back?
The point, and that's the way to look at it. So will the overhang persist? So overhangs dissipate for 2 reasons. Even the valuations become so cheap, you really don't care about the overhang, or you have finality to the argument one way or the other. And I don't see that we have finality to AI displacing software narrative anytime soon. And I think about Microsoft a lot. It's not one of my largest positions, but it's still significant because I just don't have that many positions. And it's been dead money since July.
Yeah.
It hasn't bounced when the others have bounced.
There it is. Look at that chart, right? It says exactly what you're saying. It shows it.
So despite cloud, and cloud's the big driver here, I can get cloud elsewhere. So I think about it every day. Is this just going to be a utility, essentially? A slow growth utility. It's going to keep a premium valuation to the market, but not going to outperform. And I think that may be the way that we are for a while because of the overhang, because that's the poster child for software. So I also believe what that indicates is that all AI plays, they're not going away. They're not going to be, it's not going to be a bad place to invest. You're just going to have to be more careful in where you invest in those places.
Yeah, because if that's the poster, as you say, for software, then let's throw up Salesforce 2025. Which some would suggest is the poster for SaaS.
So
and there's a serious question about AI and its impact on the whole SaaS model. There's a look, tells it better than anybody could say it.
Okay, while I'm speaking, if we could throw up a 1 month on Salesforce, because obviously you're always looking inside your portfolio when something's not performing to the expectation, trying to discover why in fact that's happening. And by the way, from a personal perspective, I sold out of Twilio.
You sold out of Twilio. So tell us why. By the way, as that stock got downgraded today to neutral from overweight, it was at Piper Sandler. They bring the target into 148. They had it at target's 148 from 145. So they raised the target a few, but they downgrade the stock.
Purchased it on December 3rd at 131. It's not an ETF. I wanted to own it individually because I believed you would see this mean reversion trade between software and the semis. What you're witnessing in the last several days is a clear struggle for software to gain any momentum to close the gap and experience that type of mean reversion. So moving to the sidelines here, as it relates to Salesforce, as I mentioned before, when things are not going right in your positioning in a particular industry, you try and discover why. And observing momentum right now in the software names, to Steve's point, it looks brutal across the board. Whether it's Okta, Palantir, ServiceNow, the one name that's interesting, if you could show up that 1 month, is Salesforce. Salesforce on a 30-day basis relative to its software peers,
we've been looking at the 1 month,
is exhibiting a degree of outperformance. So that's the one name I keep my eye on here because maybe something's building where you could return to a position there.
If you want to take a look at what, this is an overstatement, but if you can put up the chart of TTEC, put up a 5-year chart or a 3-year chart if you have one, wait for it to come up. This is a call center company, right? It's call center, web design, and all that. Take a look at what's happened to it. Call centers are just not needed because you can do it through AI and you could spend the money internally. It's not a big expense and you have much more competition. So that's what can happen. I used to own that stock. I owned it around 80. But it's, didn't lose money, unfortunately. But that's the story. And that's what software companies or software company investors should worry about. Not to that degree. But if you look at it, that's the direction that the market's saying
let me ask you this
go.
then. You make me want to jump off to another point, which is, does 2026 become the year where we firmly look at not the disruptors of AI, but the disrupted in a more meaningful way? This one would seem to be somewhat obvious, frankly.
Yeah,
you talk about a call center, obviously the disruption's there. Stock's down 95%.
Yeah.
Do we need to open the aperture up a little bit wider and take a look at what other pictures are going to be fully distorted?
Well, I think that's what's happening with the Microsoft just being flat and others moving higher. So it's a very difficult landscape to navigate with software. You just don't know. So the market's saying, I'm just going to sit in the sideline and wait till it turns out.
Let's just pivot back to the market for a couple more minutes. We were talking about certain things, reverting to the mean. Things that have underperformed, do they get back towards any sort of equilibrium, maybe with some of the other stocks that have done well? I'm looking squarely at Apple and Amazon because they so dramatically underperformed the cohort of mega cap tech in 2025. And I'm thinking about as CES kicks off, which is a big deal and maybe part of the reason why the NASDAQ in and of itself is up, in anticipation of the Jensen Huang keynote, which is going to be later today at 4 o'clock Eastern. John Fort, by the way, is going to have an interview exclusively on Fast Money tonight. So you don't want to miss that. Brad Gerstner of Altimeter is going to join us tomorrow. And he's going to talk about that, obviously, and then all things tech as we look ahead to the year in 2026. But what about this idea? Apple has a lot to answer to, don't you think? And Amazon maybe too. That Amazon says, hey, we're big players in AI, and the stock market says, meh.
Well, the stock market says that, but I think Amazon, the company, is proving itself in Amazon Web Services as being a legit top-tier player in terms of AI. Apple, as you just said, Scott, has a lot to prove. Just to cut to the chase, I am much bigger in Amazon than Apple, and that is my way of reflecting what I just said. It's also my way of reflecting that I think the valuation in Apple is way ahead of itself versus Amazon. We often talk on this show about valuation not being a proper catalyst to take a strong action, buy, sell, and that's true, because valuation mismatches can occur for a long time. But what it can be helpful for is deciding how much of a stock you want to own in your portfolio. With Apple at this multiple and still not having figured out AI, I'm happy to be underweighted. Amazon, with all the pistons in its engine, including Amazon Web Services, including logistics, including the retail business, and its valuation, which, by the way, if you stripped out all the R&D and all the business building it does, would be a lot lower. I'm happy having that as an overweight.
Sounds like it's a show me. Dow's good for 727 points, new record high today. I want to focus on Uber for a moment. Downgraded to a sell. At Melius, the target goes to 73 from 100. The stock did not finish the year well. The narrative seems to have shifted. And so has the chart. If you back it out a little bit more for what I'm talking about, last 3 months maybe, rather than intraday, you'll see what I'm talking about. You own the stock, right? Down 14.5% over 3 months. Down 9.5% over 1 month. The downgrade today says if growth were to moderate and or further standalone expansion announcements from the likes of Waymo and Tesla were to come in the U.S. market, there is certainly risk that doesn't seem fully appreciated in the market today. That seems to be the key risk in this story.
I don't disagree with that. I owned it personally and in the ETF, and recently, as I mentioned, sold it out personally. One of the reasons why is I did not like that the price action continued to fail, bumping its head against the resistance between 90 and 95. The other challenge is when you look at sentiment, universally you see bullishness. Analyst community right now, 80% buy rating with a 12-month price target of 111. 80 has been strong support for this stock. Unfortunately, my feeling is from a technical perspective that a break below 80 could occur here in the first quarter, and that's why I did not want to own it in both places, the ETF and personally.
Weiss, what do you say? You own it?
Yeah, this has been in my sell list for a while, and I was waiting for it to break through 100 and just got caught off guard, wasn't paying attention when it fell and kept going down. It's still in my sell list. I'm losing money on it, which is kind of tough to do in Uber. So
has the story changed?
The story has changed. Story has changed. If you go back to overhangs, now clearly the overhang is robo-taxis. And do you believe what they're doing there or what they're trying to do? I don't think robo-taxis are a big issue right now. I actually think it's going to be a little while. But the market doesn't seem to be patient at all with these kind of stories, see how they work out. They go to what's working and why it's momentum market, which talks to the risks that Jimmy mentioned on overvaluation. So I'd say I'm a likely seller of this. You may ask, well, why did you sell and take advantage of the tax loss on, last year? And that would be a great question, but I keep waiting for it to get back into the 90s, and it's like, why? Like, why am I doing that? So near term, I'm likely to sell it.
Can I ask these guys a question?
Go ahead.
A legitimate question,
Go
right?
ahead.
I'm not in the stock, but when I think about it, the first thing I think is it's a transportation stock. That's the first thing I think. Transportations have rallied, okay? This obviously has not. What is it? Is it an AI stock? Is it a software stock? What
It's a consumer stock. I look at it as a consumer stock.
Yeah, but then you look at something like Tesla or GM or something like that, a consumer-oriented stocks, the Winds, the Hiltons of the world, they've been doing well. I'm not calling you out. I'm trying to figure out what's going on here.
Exactly what we talked about.
Yeah.
The competition for autonomous with Waymo and Tesla.
So it's okay. Got it.
I don't think it's any more complicated than that.
Right. So
That's
I'm going
what
to
it
qualify that as it is not a transportation stock. It's not a consumer discretionary stock. It is an AI/software stock. That's why it's stinking along with the rest of the software.
Yeah.
I wouldn't go that.
I wouldn't say that.
Okay. I mean, I'm not in the
that's
stock.
That's a bit of a leap.
I'm not in the stock, but I look at it all the time, and I'm trying to understand why this thing has turned into a dog when everything else with wheels is working.
Well,
so it's not a transportation stock.
Here's
it's not
what
a hard asset stock.
You can directly correlate the news announcements with robo-taxis to the decline in the stock. That's really what triggered it. So that's all
100%.
that matters here. That's all that matters, and I think it's going to be an overhang.
I think over the last several years, the tailwinds for this company came in two places.
Right.
Number one, it diversified the model.
The balance sheet and the earnings.
Exactly. So it diversified the model with delivery and then the balance sheet.
Yeah.
Because it was a hyper-growth stock that now has become a stock that has growth at a reasonable price, and it's profitable. And that was the reason in 23 and early 24 that you got excited about it. That's the reason why I owned it personally.
Let me tell you why I owned it, because there was scarcity value here. Because the lift was just kept bumping along. You didn't know if you'd wake up one day and they're out of business or they're retrenching further. So I had scarcity value to what the consumer and the business market wanted for transportation. Now, I've lost that scarcity value with robo-taxis coming from Waymo, coming from Tesla, coming from Boyd, coming all over. Because don't forget, it's not just a U.S. company, right? So that's the issue, and that's the reason I should sell it.
That's what set Uber apart from Lyft.
Yes.
Is all of the other levers that they had to pull. They were more global.
Right.
Obviously, Lyft is not. They Uber Eats and et cetera. They have that. Lyft does not. But now you have the increased risk, I guess, from the competition. Let me bounce to another name. It's Netflix. Downgraded today as well. CFRA. 130 is the price target. You guys both own this stock too.
Why?
Okay, another one that hasn't traded all that well lately.
Nope.
Another one that has overhang. This one being, well, what's going to happen with its bid for WBD? Warner Brothers Discovery. We're still waiting for that. There's your 6-month chart down 29%. What gets this thing out of the mud?
I don't know, and I have to deal with this because I own it in two places. I own Spotify and Netflix personally and in the ETF for the better part of 2025. Tried to buy Spotify again in the last several weeks, didn't work. But as it relates to Netflix, it is really just bumping at the bottom here. And I don't know whether it's walking away or losing out. Maybe that helps. I don't know what the fundamental catalyst is here. But it does not look good sitting between 90 and 95. It's just vacillating at this area. And from the perspective of owning in two places, it's not good.
I want to get one more in real quick. It's Disney. I bring it up because it has issues that we need to watch for in 26. So it was reiterated today a buy. $140 is the price target at B of A. Succession.
Yeah.
Iger, Succession. Is that the main thing you're watching now through this year as you own this stock?
It's not the main thing. It's important. It's obviously important.
How can it not be the main thing?
Because I think we know who it is, right? It's going to be a heck of a surprise if it's not a co-CEO between Josh D'Amaro and Dana Walton. I mean, that would just be a very big surprise. I could be wrong, of course, but that's what the tea leaves read. I think the bigger issue here is execution. Demand, particularly for the theme parks, but execution on all things, whether it's streaming, whether it's studios, whether it's theme parks and new rides and new attractions. Ultimately, I find that this is a stock, to my opinion, is undervalued. But to use a word that we used earlier, I've got fatigue on this. I mean, I really do, and so do clients who own it. It's just been kind of hanging out there doing nothing for the better part of a year.
All right. Farmer Jim.
Your Honor.
Jim. You have a new title, right?
I do. I'm the chief market strategist, so I'll still run my equity portfolio, but responsible for more assets that go into the client's allocation, and just delighted to represent my team of 1,500 colleagues.
Okay. Congrats on that.
Thank you.
What's your Lockheed?
Lockheed Martin. I mean, it's kind of obvious, and look, I want to make a Yosemite Sam reference here, but that's all I'll say on it. We're going to be in a hot war for a long time.
Well, you can if you want.
I think I did. It wasn't elegant, but I did it.
In your way, it was elegant.
Yeah.
Twice.
I'm not going to mention cartoons, but let's talk about QXO. They announced that there's a $1.2 billion convertible offering funded by Apollo, and it runs out, it's only till July. What that means is an acquisition is forthcoming. That's why the stock's up.
All right. McKesson, you bounced this one, didn't you?
I did. Owned it since March of last year. Sold out of it today. I'm going to add some healthcare in the next few days.
All right. I'll see you in a couple hours on the closing bell markets, which are being closely watched following the removal and arrest of Venezuela's President Maduro. He was in court today in Lower Manhattan to face 4 criminal counts. That country's oil supply now a key question, with investors watching stocks in that space, and that includes Bryn Talkington of Requisite Capital. Joins us now, a CNBC contributor, of course. Good to see you. How are you assessing this news? How are you thinking about investing around it, if at all?
Yeah, well, when I was putting a note for the team this weekend, really it was clear that Chevron is the strategic tactical winner. They're boots on the ground. But to Dan's point about the disarray of the infrastructure, That's why Halliburton and Schlumberger are up each about 10%, because they would be the companies that would go in and rebuild that infrastructure. And then Valero, Marathon are up today equally around 10%, because as we know, Venezuela has heavy crude, and that's why we would need the Valeros and the Marathons to go refine that. So I think that when it comes down to it, the market is priced in with these specific basket of companies that I just walked through, a very optimistic outcome. And I think we are very, very early days when you have a dictator that was there since 2013 that's completely just destroyed the GDP, the freedom, just all of those things of this country. And so I think it's early days. So I'd be more fading those names. I would be fading those names versus taking new positions in those specific names I mentioned.
Would you be adding to anything that's weaker? It's not a one-size-fits-all story, so to speak. It's not like everything in the complex is up. You throw up Diamondback, which you own, which I think Joe Terranova was talking about today on halftime, suggesting not good news for a name like FANG, and here it is down 3.5%. How are you thinking about those kinds of stocks?
I think if you play it out, I mean, it's not good news if they bring their let's say 1 billion of oil online to 1.5 or 2, but those are like that's in the future, may, if, when, then come. And I think companies like Diamondback, Viper Energy, which is a subsidiary of Diamondback, which I own, which does mineral rights and royalties. I think ultimately, if you had all this glut of Venezuelan oil, sure, that would be negative for energy prices in general. But I think we're still early days. Let's see what Russia does. I think China will be more benign on this. We have Cuba. So I'm going to be looking at like a Viper, Energy Transfer, some of the names I own that are down today to see if there's some follow through and maybe adding on that weakness, because I do feel that there's never typically a geopolitical event of this size that just ends and then the construction begins. Because let's be clear, the military, there are so many people under Maduro that want to keep their own fiefdoms. I think this probably gets messier before it gets cleaner.
But if you think that this move will ultimately mean lower energy prices, and then that would mean lower inflation, rates are down today. You don't believe that story? I mean, I was going to say, is the market activity today, the price action in any way related to that? And that's why risk assets are doing well today.
Yeah, I mean, I think risk assets are doing well is a great sign that, Venezuela has a population of about 28 million. They have a GDP per capita around $3,000 per person. So I think the market is saying the Americans did a great job of grabbing him, bringing him back, no lives lost. That being said, on your inflation front, let's talk about the Venezuelan impact with their heavy crude in about a year and a half. And then we'll actually have any type of insight on what actually has happened. Otherwise, it's just like speculative fever. And so that's where I think those basket of names are great companies. But I think 3 or 6 months from now, you're not going to see continued follow through because of Venezuela on the Chevrons, the Halliburtons, and the Valeros, because there's just too much unknowns. And this is not going to go to any of their bottom lines anytime soon.
I knew you're the right person to talk to. I'm glad we got you, Bryn. Thanks, Bryn Talkington, joining us today on This News and reacting to the stocks that are moving. The other big story in the markets today, of course, the banks. Several names are hitting new highs today. Our Leslie Picker is here with more on that. So they added a lot of market cap in calendar year 2025, and they're just adding even more today because a lot of these names, as I said, are hitting new highs.
Yeah, it feels like nothing can stop this train. Scott, JP Morgan and Goldman having their best days since April. Big contributors to the move in the Dow today. And then today's gains, as you mentioned, adding to a banner 2025. The big six U.S. bank stocks added a combined $584 billion worth of market cap, the most ever for a year. On average, they gained 42%. So now the question is whether these stocks have more room to run or if many of the tailwinds are already priced in. Well, Wells Fargo analyst Mike Mayo saying in a note today that the bank run-up is only 1/3 of the way done on fundamentals and increases price targets by an average of 10%. Mayo says next week's earnings will show the first full year of positive earnings growth in 4 years, thanks to improving investment banking backlogs, loan-making margins expanding, stable credit, and excess capital from deregulation. Now, of course, Scott, much of the bank story is depending on the macro and rates backdrop, which has been very conducive. to these stocks, but obviously that's something that's a bit out of their control for 2026.
Yeah, Leslie, thank you. Perfect segue, too, because Mike Mayo is joining us right now. He's the analyst, of course, with Wells Fargo Securities. He did put out that note today. Earnings about 10 days away. It's good to talk to you. You're on the CNBC Newsline. So you tell Leslie, or you put out in your note, that the move is only 1/3 of the way done. So what accounts for the next 2/3 of it?
Well, thanks for having me on, Scott. Look, you have the first up earnings year in 2025 after 3 down years, and we think there's 3 more up years to go. We estimate 15% earnings growth last year and at least another 30% over the next 3 years, so you're only 1/3 done. And don't forget, you have generational deregulation. You've had 1 year of deregulation, and you have 2 more to go. So once again, only 1/3 done, and this is like the mid to late 1990s when the bank group re-rated. We think that re-rating is only halfway done. So I'd say we're in the 3rd or 4th inning of this bank stock rally. There's more to go.
Yeah, I mean, you made a great call on Citi, which is coming off of a great year, obviously. It's up 70+% over the last 12 months. It's your number 1 pick for the 2nd year in a row. That's curious to me after an incredible year that the stock has had. Why not look for something else at this point that can have maybe the same type of year that Citi did?
Well, I don't agree with your tense, Scott, when you said you made a great call, like in the past tense. I would say in the present and the future tense, there's still a lot more to go with Citigroup. And I think the most important point is I think 2026 is the year when Citigroup gets out of regulatory purgatory. I think Citigroup gets out of the regulatory penalty box. I think their consent order gets lifted. And the reason I say that has zero to do with anything that Citi has ever said. Citi's just doing the best they can do, and they're going to move forward. But what Citi has remaining is only, in my view, regulatory box checking. Meanwhile, the regulators have said they are focused on safety and soundness, substance versus form. So if Citi has completed the substance and regulators are focused on the substance, then I think 2026 is Citi's year. And once that consent order gets lifted, I think it is night and day different. Instead of Citi's board spending over half its time on regulatory matters, they can spend time on running the bank. The other thing, and we released a big new in-depth report today, and we said, they only have 8% returns, which is worst in class. This is not best in class. This is a worst in class bank that's getting back in the game. It's like Citi has been on the injured reserve all decade, and now they're getting back in the game. But if you take that 8% return and you adjust for the abnormal expenses and abnormal costs and abnormal capital, the current returns would be 14%. So it's not a matter of if, it's a matter of when I think Citi gets to these much higher returns. And if you get to these much higher returns, then I think they get valued still a little bit below the average bank. And Scott, the number you get in a few years is $200 stock.
Mike, it's good to talk to you. I appreciate you.
Yeah. Still more to go. Buy Citigroup.
Okay. All right. Well, you made a good call, and you still think it's going to continue, so I'm going to stick with that. Mike Mayo, thanks for joining us. We're just getting started here on Closing Bell. Up next, the star analyst Dan Ives. He joins us live from CES. We'll get his outlook on the AI trade, what he's expecting to hear this evening from Jensen Huang's keynote speech. That beginning in about 40 minutes or so. We're live at the New York Stock Exchange, and you're watching Closing Bell on CNBC.
What could somebody possibly come in with that we've never seen?
All right, welcome back. In less than 1 hour, NVIDIA CEO Jensen Huang takes the stage at CES for his closely watched keynote address. Wedbush's Dan Ives joins us now with what we might hear. It's good to see you. You are there, as one would expect you to be. What's he going to say today?
Look, I mean, there's only one godfather of AI, right? And it's Jensen. I think he's going to lay out specifically around robotics, autonomous. Look, this is the next chapter of AI that I think Jensen's going to talk about. And obviously, I think he's also going to hit on just the demand that he's seeing, and no one has a better vantage point. And Scott, I think really what it does, this kicks off the next sort of layer of the AI revolution when it comes to robotics, autonomous. And I think that's something that is not factored into NVIDIA stock, and I don't think it's factored in to a lot of these other tech names, Qualcomm among others.
So he's ready to move on, you think, to AI 2.0, if you will, where we move past all of the talk specifically about that company's chips and about how they can better be utilized in the areas that you're talking about?
Yeah, I think this is really him planting the flag, showing that NVIDIA, it's not just about chips, the 12-to-1 demand that we see, and obviously fueling the AI revolution. It's showing that they're going to be end-to-end when it comes to robotics. They're going to be such a huge player when it comes to autonomous. And like we've talked about, like for Tesla, this is the year of autonomous. It's the year of robotics. And I think it all starts with Jensen because no one has a better vantage point. And I think what he lays out here is really going to dictate strategically what we see on the consumer AI revolution that hasn't even started yet.
Now, why has the stock been a sideways trader of late if everything is so bullish from even here forward?
Yeah, I think to some extent, I think it's investors thinking that, you know, numbers will beat the street, but not by a lot. What's the excitement? You know, has it all sort of been in the rearview mirror? Scott, I think this is a $250 stock. Like, to me, the demand and what they're going to show in their next quarter, we talk about 12-to-1 demand to supply. When you think about the autonomous and robotics revolution, what that's going to mean to NVIDIA, I think that alone is going to add $40 to $50 a share. And I think this is one where investors, they're kind of yawning at what NVIDIA stock's doing right here. And I think we sit here 6-9 months from now, I think it's a table pounder opportunity to own NVIDIA, to own Microsoft, to obviously to own names like Oracle as well.
Well, hold on one second, because I'll get to some of these other names, but you raise an interesting question, or maybe a problem in some respects. How high is the bar now? And is the bar now viewed to be increasingly high, arguably to the point where they can't meet whatever expectations we now have for this company, and that ultimately is going to cause some sort of correction even further in the stock?
Yeah, it's a great point. I think at 225, 230, maybe I'd say that. Here, I actually disagree. I think investors are underestimating what the demand's going to look like for NVIDIA in terms of next year. I think street numbers are underestimated by 15, 20%. Next 12 to 18 months. And I think it's the ripple effect. For every dollar spent on a NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. That's why we've said, I mean, it's top of the third inning in a 9-inning game, 1 out, in terms of where we say. That's why this tech bull market's going to continue to play out. It all starts with the Godfather right now.
What's wrong with Microsoft? Why has the stock been sort of ho-hum? I mean, over the last 12 months, not terrific. It's underperformed the market, obviously. What's the deal?
I think there's a view that, okay, Amazon, obviously, Chassie's done a great job, that, you know, everything AWS is doing, what Korean and Google have done as well. You're starting to see them narrow. Microsoft has it played out? To some extent, similar, like as we talk about with NVIDIA. Like I've said, I think this is a stock that has a 6 in front of it in 2026. I think it's one where it comes to the enterprise, as more and more move to the AI revolution on the enterprise, the first call goes to Nadella and Redmond. And I think it's one where, as this plays out, especially at the end of January and throughout the year, I think Microsoft's going to be viewed that this was a golden buying opportunity. It is not the time where Microsoft's ending this. I think they're still, in the early part of this AI piece from Microsoft.
I understand that, but what is the market trying to figure out? Like, what has caused the stock to trade as it has? Show up another 1-year chart that we had up a moment ago. I mean, it's a sideways move. I mean, it's like plateaued at that number. What happened? Yeah. Like, what is the issue? Not all the hyperbole about what you think is this, that, the other. I want to know, why has the stock basically gone nowhere.
Yeah, I think it's Scott, I think it's the view that Azure, in terms of the growth rates, are ultimately going to come down. That you're going to see more and more companies balk at prices, and conversion rates on deals have peaked. I think fundamentally, that's real. When I talk to investors, that's really the biggest concern. But I just go back to like the last month, we've had 20-25% of the deals from Microsoft accelerate in terms of our checks. So I think this is sort of a prove me year. Obviously the stock, as you said, it's sort of languish on the treadmill. 2026, I see as a golden year from Microsoft. 2025 was, I think, the setup year to 26 being, which I think going to be a Hall of Fame year from the Dell and Microsoft.
All right, we'll talk to you. Dan, thank you for joining us from out there as we await Jensen Huang. Again, top of the hour. Don't miss the exclusive, by the way, with him. Now bring in Miller Value Partners, Bill Miller IV. It's good to talk to you. Welcome.
Thanks for having me, Scott. Happy New Year.
You as well. What do you make of the move today, first and foremost, that we're seeing in crypto? I find it interesting that if it's being attributed to a disinflationary event like Venezuela, oil isn't really reflecting that. So why would Bitcoin be?
Well, I think Venezuela is going to be a blip on the radar in the long run. Disinflation has been the story of economic history for 800 years. Which is why Bitcoin's a particularly interesting asset to own. What's really interesting is we're a big inflection point right now for digital assets, Bitcoin especially. If you look at the regulatory clarity that's come into the system over the past year, it's a whole new ballgame. Head of the SEC said a couple weeks ago that capital markets are all moving on chain. Jamie Dimon has reversed course. They're now building on blockchain. So all of this is massively positive for Bitcoin, which looks like it's put in a higher base than it did in the spring of 25. The technicals are really starting to line up, and it looks like it's ready to go again. I personally expect it to break out to a higher high than its all-time high from the fall.
Why has it traded so poorly over the last, as we said, few months?
Well, it was down 6% in 2025 for an asset with that level of volatility over the long run. That's not a big deal. I mean, I think it's important to zoom out. People freak out because gold outperformed Bitcoin by so much last year. It's all part of the bigger debasement trade is the reality. And it's just poised to break out higher here, Scott.
I'm looking at your favorite ways to play this, and strategy is tops on your list. Speaking of things that have traded poorly, down 58% in 6 months. Are you concerned about that holding at all?
No, because from a valuation-focused perspective, it now trades at its net asset value, and I wouldn't expect it to go materially below that. And in fact, it's got some leverage. So if you're bullish on Bitcoin, something that's has positive leverage to Bitcoin should outperform Bitcoin. And also in a risk-on positive Bitcoin environment, you might also expect to see some premium accretion there too. So you're likely to potentially even do better than MNAV in something like that. One other name we absolutely love, which has had a big day today, but we still think is extremely cheap. It's a company called Figure Technology Solutions. It's up about 20% today, breaking out to a new all-time high on decent volume. The reason we love it, so this is the leader in real-world asset tokenization. I mentioned earlier that everything's moving on chain. This is an $11 billion enterprise value and $1 trillion opportunity. They've got a 75% market share, okay, in real-world asset tokenization. And what that means right now, at least, is HELOCs, home equity lines of credit. They've done about $19 billion in originations. That is a massive market. And the reason this is so compelling is because they lower the cost of origination and servicing by banks by huge amounts. And so these guys are the leaders. And again, that's a really asymmetric setup. So we love this from a long-term value investor's perspective.
You moved off strategy a little faster than I wanted to. So I'd like to come back to that if I could. Because I'm looking at a story today on the street, which says MicroStrategy reports $17.44 billion in unrealized loss on digital assets during the last quarter. Now, obviously, the implication is it is so tightly correlated to the move in Bitcoin. Bitcoin gets hurt, strategy is going to get hurt. Do you have any fears of balance sheet risk at all related to this name?
No, absolutely not. As you mentioned, that's just a mark-to-market situation with Bitcoin being down from its all-time high up in October. If you look at what he's done on the balance sheet side of things, it's pretty compelling. From if you're really focused on risk, he's got almost 3 years of dividends now for his preferred and debt sitting on the balance sheet in USD cash. Okay, so very little risk there. So it's interesting that it's trading at MNAV when effectively the risk to strategy shareholders from long-term perspectives is as low as it's ever been. So we're big bulls on that right now.
Have you been a buyer on the weakness in strategy?
We've certainly been a hodler, and it is something we're looking at. A hodler is different than a buyer.
You know what I'm saying? I understand the holding on for dear life, but some would look at a pullback of some 50% plus, and if you're as big of a believer as you profess to be, wonder if you're buying more in that environment.
We have actually, in our income strategy, added to our MSTR, or the strategy D, which is effectively their high yield bond. We think that's a really attractive risk reward setup right now. We do think MicroStrategy is also an attractive setup, and I wouldn't be surprised to see us buying it all.
Let me ask you one more. This idea of crypto treasuries are now so in vogue. Are there enough buyers for those and buying the pure play digital assets themselves?
Well, at the end of the day, a lot of these things are going to need to be operating businesses. But my perspective is, over the long term, it may be the case that every company is a digital asset treasury company, and no one wants to hold fiat when they actually do their work on the governance systems around a lot of these digital assets and the price appreciation potential relative to eons old technology known as fiat. So I do think over the long term, there absolutely is the demand, and we'll see that continue to materialize.
Bill, we'll see you soon. Nice to visit with you. That's Bill Miller IV. Up next.
What's up, everybody? It is Tuesday, January 6th, and it's 1:16 p.m. as I'm recording this video. We just saw some clips from halftime report and closing bell from yesterday. We're going to go over a number of the stocks that they talked about on the show. In fact, let me show you a list of the stocks that we're going to, it's about 24 items that we're going to run through here. And you can see them right there. This is the list of stocks that we're going to look through. We're also going to take a look at the indices, like SPY, the QQQ, the Dow, the Russell, the FEZ, the Euro stocks, some of the Mag 7s like Tesla, Apple, Meta, Microsoft, Amazon, and we also have 5 stocks that we're going to look through for members right here. But before we do that, let's take a quick look and see how the markets are doing. Dow is up currently 0.92%. Pretty nice, pretty nice. It's actually up the most. NASDAQ, in fact, yesterday I mentioned in the analysis that I did that the Dow was looking the strongest, okay? The NASDAQ is up 0.49%. S&P 500 is up 0.51%. Russell is up 0.51%. What is causing all this? Well, let's take a look at some of the information we got here. Dow climbs, as it says here, towards 49,000, up 0.8, outpacing S&P 500 and NASDAQ in a low volume session. Tech and healthcare sectors underpin the rally, fueled by CES-driven AI momentum and new NVIDIA and AMD chip announcements. NVIDIA, Rubin, and Uber robotaxi news add to positive sentiment for AI-related stocks. The energy sector outperforms after Vistra's $4.7 billion acquisition, and an oil price surge linked to Venezuela Maduro headlines. Phillips 66 and other energy names rally on geopolitical oil developments. Metals and commodities remain strong, with record copper prices and silver spike boosting industrials. Investors rotate out of the financials and into energy, healthcare, and materials. We got traders eye Friday's job report for potential Fed policy signals. And Tesla shows pockets of weakness despite broader market strength. Let's take a look at the heat map. It's going to give us an idea of how the individual stocks within the S&P 500, okay, because that's what we're looking at here in this filter here. Amazon up 3.82%, Tesla down 4.86%, Apple is down 1.57%, Google is down 1.02%. NVIDIA is up slightly, so is Broadcom. AMD is down 3.47%, but the majority of the semiconductors are doing pretty well. So is software stocks. Energy stocks actually down today. Okay, they're in the red right now. Tobacco, Philip Morris is down, and basic materials looks pretty good. Let's take a look at actually the sectors real quick. Yeah, you can see basic materials, healthcare, technology, consumer cyclical, all looking very strong. Industrials too. Energy down 1.93%. Very interesting, right? Some profit taking maybe taking place. We're going to look at the charts. Maybe we'll get some insights from the charts. We're going to start off with the S&P 500. That's the, it's basically what we need to look at first to get us an overall perspective of the top 500 companies, how they're doing. And you can see right now, price is still stagnant. If you think about it, it's still stuck in this little range here. It has not really broken through these highs right there. The high I'm talking about specifically is 690.166 is what it needs to get above. That's the high from Friday, December 26th. So it has not gotten above that level. That's interesting that it's stalling right there, but it's building a base, and so all it needs is a little push. And that's a weekly chart, by the way. Here's a daily chart. You can see it a little bit more clearly what's going on. The QQQ ETF up 0.74% currently. You can see that it's looking very bullish, actually. And guys, for those of you who are unfamiliar with what we're looking at here, let me just switch it to a weekly chart so I can explain it very quickly. We're using the Ichimoku indicator, okay? And so there's the Japanese candlesticks that represent price, okay? You can see it's still moving because currently it's 1:20 p.m. as I'm recording this video, and you can even see the seconds going by. So we will see the percentages change throughout this video. But basically, what we're looking at here with this indicator, it's a Japanese indicator. It's essentially a quick way to identify. What it stands for is at a glance, Ichimoku. At a glance, what we're looking at is, or trying to identify, is the strength of the trend. Right now, the price is above the Tenkan-sen, the 9 period, or conversion line, which is the midpoint of the last 9 periods. It's above the Kijun-sen, the red line, which is the baseline, or the midpoint of the last 26 periods. And then it's above the cloud itself, which is comprised of 2 lines, the Senkou Span A, which takes the midpoint of these 2 moving averages and projects it out 26 periods into the future. And the Senkou Span B takes the midpoint of the last 52 periods, projects it out 26 periods into the future instead of under like it did right here. Okay, so that's what makes it unique and different. And when we have Senkou Span A above Senkou Span B, that's very bullish. We also want the green line above the red line. And one final line is the Chikou Span, or lagging line. What is that? That's actually closing price, or the current price right now. Okay, in a line form, instead of Japanese candlesticks, it's in a line form, and it's projected, instead of 26 periods in the future, it's 26 periods into the past. Why is it there? It's there to help us identify where we are today in relation to where we were 26 periods ago. If we are above, that's bullish, right? So that's a bullish signal. So right now we have everything telling us that this is a very strong trend, okay, on the weekly chart. By the way, it applies also on the daily. So what I'm looking for is for both the weekly and the daily time frame to show me strength, the longer term charts and the shorter term, okay? And if we get that, I give it a blue flag. So you'll see a little blue flag here for these 4 ETFs. You won't see it on Russell 2000, and I'll explain in a second. So here's the QQQ ETF. Again, here's a daily chart, very bullish, right? Price above the moving averages. Here's the weekly chart, also looking very good. Dow Jones, strong still, right? Up 0.85% today. There it is on the weekly. Here it is on the daily. In fact, I like the Dow the most, and I mentioned this yesterday that it was also breaking. Look at that little level right there. That little symmetrical triangle was broken yesterday. Happened on high volume. If you look down here below, see that little candle, that volume bar, and it's continuing now. As you can see, it's moving up further, up 0.86%, the most out of all these ETFs. What about the FEZ, the Euro Stocks 50? This is also looking great. As I mentioned yesterday, it was looking very bullish because, it broke through these levels. That happened on Friday. In fact, I even mentioned that the FEZ looked strongest out of the bunch. Even though it's only up 0.03% right now, you can see that it's been up and holding up above these this little consolidation area right here. So I like FEZ, and on the weekly chart, it looks good too, obviously. which is why it gets the blue flag. What about Russell, the Russell 2000, which is the ticker symbol IWM? Well, it looks great on the weekly. No problems there. It's up 0.52% today. Here's the daily chart. The only drawback here, and it's not a big one, but it's basically one of the elements is incorrect or not in confluence with the rest of them, and that's the Tenkan-sen. The 9 period is under the red line, but price is currently above both. And personally, I would want to wait for that green line to get above the red line, and it also is right under that resistance level, that prior high, and it's got some more resistance level, another resistance level right there as well. Okay, so that's something to just keep an eye on. What about the VIX? VIX looks pretty good because it's dropping. We want the VIX to be dropping. That's the volatility in the markets, so that we're not seeing any spikes here or anything like that, and that's conducive to a more bullish market. What about the stocks they talked about on the halftime report and closing bell? Let's take a look at these. So we'll start off with the strongest ones with the blue flag. GLD is a ticker symbol for gold. Okay, up 0.98% today, looking very strong here in the daily. Like I said, I've already reviewed all these on the weekly. I'm not going to show you the weekly on every single one of them. We're going to do the daily analysis today. So GLD looks great. CVX, oh, okay, this is a big change that since earlier when I was reviewing this, folks, because it was up, as you can see. In fact, it had gapped up approximately 5.7, let's see, what was that, around 5.8%? It gapped up, and then it immediately started getting sold off, okay? You can see that selling taking place. This bar, if we switch it from a daily chart to a 5-minute, we'll be able to see all that selling that took place. Plus, the gap up actually was, I take that back, the gap up from yesterday was a short little gap up right there from the prior day's candle. That was a reversal candle. They call that a hanging man. A hanging man. It's the head and the long body or wick. This is the small body starting at the top and the long wick at the top, at the bottom. That's a reversal candle if you find it at the top of a move. So if prices moved up, and you see that, that's very bearish. And yeah, it didn't take long, right? 1 day and it's dropping. Now, let's take a look at that pattern for a moment. I just want to show you guys the actual candlestick real quick. So if we go to my Twitter page here, which is, you'll find it under @BlueCloudTrader on x.com. Okay. So look me up, @BlueCloudTrader. And if you scroll down, all right, if you scroll down to the highlights right here, click on that and then scroll down a little more. And this is where the candle pattern reference sheet is. You click on that box there, it'll pop up a little bigger and you can see the hanging man pattern right there. Whoops, hold on 1 second. Okay, do you see that? Small body, long wick, and that's after a move up. That same candle, if you saw that same exact candle after it dropped in price like it did over here, and you see that exact same candle, they call that a hammer. So it's all about the positioning of where you actually find the candle. Is it after a drop? Then that's bullish. If it's after a move up, it's a hanging man and it's bearish. Same thing applies to the shooting star here, a long wick with a small body. And then over here, they call that an inverted hammer. So it's the same exact looking candle, only it's where you find it, which is at the bottom. And it just applies to pretty much everything, including the bullish spinning top and the bearish spinning top, which is a very similar looking candle. Over here, you can find out a little bit more about Japanese candlesticks. The opening price is the lower part of the body. There's the closing price. If it's a red candle, the opening price is right there. There's the closing price. And the wicks, the top and the bottom, represents the low of the day, the price, and the high of the day. All right, very simple stuff, but it takes a little while to memorize a lot of these charts, and they've got some funny names like 3 black crows. Okay, you've got bullish abandoned baby down here, 3 white soldiers. Okay, evening star and tweezer tops and bearish harami and all kinds of fun names for these different patterns. But look, there's a higher probability when you see one of these types of patterns, okay, whether it's a single candle, double candle, or triple candle pattern, that it's going to change the direction. It's never guaranteed, though. Just keep that in mind. Never guaranteed. All right, now, so in this case, obviously, it did lead to a decline here, down 4.39. Here's a 5-minute chart, so you can see what it looks like for CVX right now, Chevron. So there's the gap up, dropped, recovered, and it started dropping around 9:50 a.m. All right, anyway, let's keep going, guys, because we can't spend too much time on any one stock. I want to get all these out to you. So let's look through these. FTAI, Aviation Limited, on the daily chart, looking pretty strong. Okay, it's getting extended. It's far away from the moving averages. Be careful with this one right at this point, but it's up 4% almost. Here's the weekly chart so you can see what that looks like. I think it's got more room to run. Maybe it would make more sense to wait for it to pull back a little bit, you know, maybe take a breather and then re-enter at a slightly cheaper price, maybe. RSP, I like this one. This is the Invesco S&P 500 equal weight. All right. I think Farmer Jim was talking about this one. So yeah, he's correct. It's a nice little pop-up that we're seeing here in the equal weight ETF of the S&P 500. I like it. It's got a blue flag because it looks good on the weekly as well. XLV looks great, up 1.70%. You can see that it broke through this level of resistance today. What about Goldman Sachs? Also looking good, up 0.77%. Okay. MCK looks, oh, hold on, folks, hold on. Okay. For whatever reason, I accidentally hit the blue flag here. So McKesson. Oh, okay. So yeah, McKesson is inside the cloud. So I would not recommend adding a new position here. Okay. If you're in this position, you might want to like manage that position, obviously, because it is showing some strength today. It's up 0.87. And it does seem to be moving slightly up, as you can see right now in this upward little tiny tight channel. Okay, but it's inside the cloud. So you don't want to add, according to the rules of Ichimoku, you don't want to be adding positions when price is inside the cloud or under the cloud. All right, so let's get rid, well, I'll take care of that later. KBE, I don't want to get it all mixed up now. KBE, Spider S&P Bank ETF, looks pretty strong. Okay, yesterday it popped above the Tenkan. It's continuing its move up. So that's what we're looking for. JP Morgan is looking good, up 0.0, it's just up 0.07%, but it's a strong looking chart. I like it. Silver is looking good. Yesterday we talked about silver a little bit. It was kind of like just kind of getting stuck in this little area here, like a little triangle pattern, and now it broke right through it like butter. And now it is moving up some more, up 5.82%. It's a defensive, it's kind of like a hedge type trade as well. That as along with gold, obviously. Let's look at that. Silver is up 5.8. XLF financials looking good, up 0.41%. Citigroup looks good, but it's only up 0.19% and is developing a reversal candle here, a little spinning top. So would I be adding a position here? No. Based on that little candle, not quite yet. All right, I would want to see it more bullishness, basically. Okay. Let's keep going. The rest of these do not have a blue flag, and there's a reason for it. So let's go through them. KKR. By the way, I'm not sure if I reviewed all of these. I'll have to double check. Yeah, so on the weekly chart here, KKR is under, the Tenkan is under Kijun-sen, so it does not get the blue flag for that reason. On the daily chart, it doesn't look bad at all. It looks pretty good. In fact, I like the fact that it found some support down here at the 200 and bounced off that level and got back above the cloud. So that's very bullish for KKR. LMT, Lockheed Martin Corporation. Okay, up 2.97%. Looks great on the daily chart. We got almost like a spinning top, no, I'm sorry, a shooting star type candle forming here. A little bit of selling happening. As you can see, after it reached this level of 538, it's dropped about 2% since around 10:30 a.m. this morning. So just keep, just let you know what's going on with LMT, Lockheed Martin. How's the weekly look? On the weekly chart, it just burst through the cloud itself. So actually, this one also gets a star and a flag. So it's going to be, it looks pretty good. I like it. Disney. How about Disney? No on Disney. Why? Because on the weekly chart, price is I'm sorry, the Tenkan, the faster moving average is under the slower one. It crossed back here. It is showing a lot of strength now. It's popping above the moving averages right here, but it's still on the weekly not looking particularly bullish yet. On the daily, it does look pretty good. I like it. We haven't really established a new trend up yet. However, look, from this low, we have a lower low, all right? And so we have not established a higher low yet. I don't know if I could call this a higher low. I'd like to see at least 3 candles dropping, and we only have 2. Maybe, I mean, it's right on the verge of creating a higher low right there, but we still haven't taken out this high either. So I would hold off on Disney for the time being. Netflix, still in a very embedded decline. I mean, it's been dropping and dropping some more. You can see that if we look at the weekly chart, okay, it started breaking down once it got into the Kijun-sen, and we had a negative crossover there. Everything started to fall apart right around this time back in July 18th. We did have another buy signal back on September 5th. That didn't turn into anything, and neither did the one on October 10th. It just built a base for a little while there. It was just stuck in that. Once we had this negative candle, you can see what it led to is this decline that you see here. So Netflix is not something I would be adding a new position in right now. And on the daily chart, it's kind of embedded in a decline right now at this time. Uber is in a decline as well. Okay, so Uber is not something I'd be jumping into. Yeah, it's up 5.38%. But when you look at the overall picture here, it's overall it's been declining. Lower highs, lower lows. It's what's in a downward channel is what it is. Okay, that's what that is, folks. And here's a weekly chart. Showing a little bit of strength these last 4 weeks, where it's actually trying to like bounce in here, and it got back above the cloud. But I would not be jumping in quite yet because it's still under the cloud on the daily. CRM is showing some strength today, up 2.36. Salesforce popping above the Tenkan. But what does it look like on the weekly? Because it has been in this like funk for a little while. Let's look at the weekly chart. Yeah, it's still under the cloud itself. So there's not enough momentum here for me to justify jumping in here. Okay, not quite yet. What about Twilio? Whoops. All right, so Twilio, TWLO, it looks bullish on the daily. I'm sorry, the weekly chart. We're looking at a weekly chart here. What about the daily? It's under the Tenkan, so it's almost there. It's almost there. Okay, it needs to break back above the Tenkan, and then we've got something there. Adobe is inside the cloud. I'd skip Adobe for the time being. It's also under that declining 200-day. QXO popping on the daily chart, up 2.32%. What does it look like on the weekly though? See, it's kind of stuck in this little range, tight range for a long time, and under the 200. I'd stay out of that one. APO. This is why I like to look at both time frames, because I want to get an overall bigger picture, right? That's what the weekly charts do. Each one of these candles represents 1 week versus 1 day, and so we can get a better picture of where it is, where it has been, where it looks like it might be going. On the weekly chart, I like the weekly here, except for the fact that the cloud is still bearish. The single span A is still under the single span B. Okay, so I'd hold off on that. On the daily chart, it does look more bullish. TTEC under the 200-day, under the Tenkan and Kijun-sen. I'd stay out of that for now. XBI, biotech is under the moving averages, but it was up 0.90%. So there's the daily, and the weekly chart is still strong for biotech. What about the next segment here? We're going to talk about Tesla, which on the weekly chart, as you can see, for 2 weeks now, we're still under the 9 period here, the midpoint of the last 9 periods. Not good, down 4.95%. Here's the daily chart, stalling at the cloud. Maybe we'll get a bounce, maybe we won't. Only time will tell. Apple is inside the cloud. I'd hold off on Apple while it's in there. Meta is inside the cloud as well for a long time. It's been under this 200-day for so long, right? not the time to be jumping in, folks, because you're just tying your money up. Why not find those stocks that are like actually showing some strength right now, that have some momentum? Jump in there, when there's more interest. Right now, it's just like a dead stock at this particular moment in time. And right now, the same thing is happening here with Microsoft as well. You can see it right there. Okay, the chart doesn't lie. It's just stagnant. Okay. Amazon, on the other hand, today showed a lot more emphasis, a little more oomph, as they say, right? Up 3.63%, broke above the cloud. So that's a good sign. Would I be jumping in here based on just that one candle? And the answer is still no, because as you can see, the cloud is still bearish. And I like the cloud to have all elements giving me a buy signal. So why not, focus on those? Here's a weekly chart on Amazon. It looks good. Okay. So Amazon is almost there. I'll say that. I will say that. So yeah, what I like about Amazon also, just looking at it from a technical, like old school technical analysis, it broke above this high right here today. So that's very important. We've got a series of higher lows down here. You can see that right there. So it's kind of like an ascending triangle pattern right there. The only thing is, right, if you look down below, notice how the volume is not quite that impressive. Yeah, do you see how it's lower than the prior day? The prior day, it did push the price right to that level, and then it gapped down this morning, and then it started getting bought up. And at this moment, there's a wick that's forming at the top, which represents selling is happening towards the end of the day. So let's look at that on a shorter time frame just for a moment. We'll go to a 5-minute. So there's the selling that I'm talking about towards the end right now. So there's the high of 243, and it's dropped about, 0.73%. It's still like, the market's still in effect right now because it's still on, right? Market closes at 4 p.m. It's 1:41. But my point is, the technicals here on the Ichimoku cloud are not quite there yet. All right, let's take a look at the rest of these. And by the way, guys, if you like the analysis that I do here, and you want to see some of my exclusive member-only videos that I post, one way that you can do that is just come to my channel, YouTube channel here. You're already here. Just click on my channel, okay, and find out a little bit more about the channel itself. If you go to the top here, if you click more, okay, you can find out about me. I've been trading for over 25 years. This is my focus, is the Ichimoku indicator. Okay, and if you want to get, if you like the software that I'm using, it's called TC2000. The charting platform that I use is great. It takes a little time to get used to it, but once you do, it's going to help you with like identifying those the trends and changes. And you can also set up your layout in TC2000 to look exactly like mine. There's a link right here too. You see that. And so you can click on that or there, and then you can get a $25 coupon towards the charting platform, which is great. So you can actually try it out for a month for free, literally. And if you like it, you can stick to it. What else would I recommend that you do? Okay, well, at the same point, there's a become a member link right there. But you can either click here or you can click on the join button. It doesn't really matter. Or you can click at this link, same thing, right? So you hit the join button, and these are the 3 memberships that pop up. So you got Blue Cloud Supporter for $4.99, and you'd be helping to support the channel, and I do appreciate you. You can request a stock or ETF be analyzed on an upcoming video. What about Blue Cloud Trader? Under this level, you can request up to 2 stocks or ETFs be analyzed, per month, once per month. Exclusive member-only strategy videos. Now, this is where I every weekend I go over my entire portfolio and I share, the trades that I placed. How did my trades do? Were they profitable? Did I have losing trades? All that. I shared that information. So it helps you to get a better idea about my methodology, my strategy. And then I also share, like this last weekend, for example, I shared 30 new trading ideas. Guess what? I've added a bunch of those yesterday and today. a number of them, okay, to the portfolio. So that's what I'm talking about. And those come generally from the analysis that I do over the weekend. So I do a much more in-depth analysis of the sectors, the strongest industries, and then I pinpoint the strongest stocks within the strongest industries. And then I go from there. And so they're doing really well. All right. Now, what about, and under this level, you'll get that video once a week on the weekends, and you can watch that. It's usually about an hour long. What's the next level? Blue Cloud Legend. So for $49.99 a month. And I was going to increase the price, but I'm holding off on doing that for the time being. But that's why you guys should consider becoming members now. And so basically, you do also get that member strategy video there. You can request the 3 stocks or ETFs be analyzed each month, once a month. I've got some day trading videos recorded that you can view for those of you who are into day trading. I don't day trade as much as I used to, but for those of you who are into it, you can learn about a little bit about how I do it. And then the most important part of this is the daily stocks and ETF trades updates. So every day, what I do is I'll post. Okay, like yesterday, I did a post and I made it public so you guys can actually find it and you can see what stocks I added yesterday. You'll be able to see it under posts because it is a free post, but generally they're not free. Okay, so I did one yesterday, so you can click on posts and you can see it. In fact, if I click on it, let me see. Yeah, there it is. Yeah, I'll show you what it looks like. Why not? You only live once, folks. Monday, January 5th, 2025. Always make sure to click on the read more button right here. And then you find out what stocks I added. Okay, which stocks I closed out of. Okay, a brief synopsis of which sectors are looking good. What else? Key drivers and top stories of what's going on throughout the day. But I think here's another more really, really great part of the membership is this part right here. It's the Blue Cloud Buy Scanner results. So I have a proprietary scanner. It looks for stocks that are strong on both the weekly and giving a buy signal on the daily chart on that specific day. And so there's a list. Here's Shopify, for example, popped up yesterday. Okay. There's a list of the stocks that popped up. So, and it's literally screens through, are you ready for this? Over 6,000 stocks to find the best. And anyway, consider becoming a member and you can access this every day. Okay. And where do you find it? You basically, once you become a member, next to post, there'll be a new tab and it will say membership. And you click there and that's where you'll find it. Okay. All right, let's get back to these stocks because our members have requested a couple. So I'm going to go through these. RTX Corporation, industrial sector and aerospace and defense, up 0.64% today. Obviously, one of the stocks that's benefiting from the whole Venezuela situation. There it is. It moved up about 1.34% these last few days. Not a big move, actually. I was thinking it might really pop, but it's moved up. Here's a weekly chart, a very strong chart overall. I mean, RTX has been doing well pretty much all year. As you can see here, once it broke above the moving averages back here, since then it's up 55%. It had a little pullback, short-lived, stayed above the cloud, as you can see here, never closed inside the cloud. Do you see that? It gapped into the cloud at one point and then popped and closed above it that same week. What about ON on Semiconductor Corporation? On the weekly chart, we have a bullish future cloud. Prices above the moving averages. Tenkan is literally right at the cusp of crossing. So I gave it a blue flag nonetheless. What I would be cautious with here with ON is the fact that we're coming to a resistance level. You can see it very clearly right there. Okay. The high of that candle, and that's a weekly level, is 60. What is that? I might have had one. Do I have any lines? No, I don't. Not on that one. The high of that candle is 63.63. Okay, so just watch 63.63. Now, the other thing that you also want to pay attention to is the 200-day moving average. That's around $67 mark, it most likely will find resistance at that level. So, just keep that in mind. Here's a daily chart. Today, for example, it popped, and now we've got a shooting star. So I wouldn't recommend adding a position here based on that candle alone. Okay, that's a reversal candle. Yes, it's up 3.5%, but you can see how easy it is to get distracted by seeing percentages and getting excited about something like that. But look at the overall picture of what's going on. Why is this candle a negative reversal candle? So let's explain that. Let's bring it to a 5-minute, and you'll see what I'm talking about. So it shows the following. If you look closely, here's what happened. Price today on the 6th, it gapped up. It moved up, came back to the opening price, bounced. Okay, that's beautiful, nice. And then it got into the Tenkan, and now it's been doing the following. It almost kind of looks like a head and shoulders pattern, which is a bearish pattern. There's the head, there's the shoulder in the 5-minute, and there's the other shoulder. Okay, and you can see that it actually broke that neckline right there. Okay, and it's dropping, and it's still staying under the opening price. But because price gapped up, it looks very bullish, but right now it's showing some weakness at this moment. Add to that the directional movement index. Currently, the red line is above the green line. I'd stay out of on Semiconductor Corporation. Okay, so yeah, I mean, it's overall, we've got everything looking good, but except for the fact that it looks like it's going to most likely reverse here. ONDS, Ondas Holdings, Inc. Now, this one here does get the blue flag. However, that's just purely based on the technicals, because on the technicals it does look good, right? Ondas Holdings, you can see technology sector, communication equipment. You can see that it broke above this high right here. It looks like it's still moving up. On the daily chart, it looks good too. Obviously, it's stalling a little bit, down 1.2% today, right? But just keep in mind that this is a company that is not profitable yet. It still has a negative 172.49% profit margin, and their operating cash flow is also negative 34.1 million. It's a capitalization of $2.7 billion. Price of sales is really high, 81.08. But they do have a very strong sales growth rate, 56.3%. So everyone has to determine whether they want to add a position. They're okay with that taking that type of risk. But I personally would not be jumping into this one specifically. Okay. Next stock, APLD, Applied Digital Corporation, is above the cloud barely. Tenkan is under Kijinsen. The cloud itself is still technically bearish on the daily chart. What about the weekly? Weekly chart, it looks bullish because it did break above last week on Friday, above the Tenkan. But as you can see here, and it's moved up, but today it's down 0.99%. Again, this is another stock where the profit margins are negative, 111.29%. So keep that in mind. Their next earnings are tomorrow. Ooh, that's kind of scary. So whenever earnings are it could go either way. And you could have a huge jump to the upside, but it could also break down significantly. We're talking about 10, 20, 30% is what you can expect. You can actually see it here in the price itself on this weekly chart, how it's been building this little symmetrical triangle pattern. So I don't know which way it's going to go. I don't know. It's all dependent on their earnings announcement, right? That's going to help determine its direction. SoFi is actually down 10. This is another stock that was requested. It's down 10.28%. It's been under the Tenkan here on the weekly chart. You can see here since December 5th. It hasn't really moved much. It's been consolidating for a long time here. It's been just stuck in this little range. You can see that. We're talking about all the way since literally September 19th. It's around the same level as it was back in September. So on the weekly chart, it's not giving us a buy signal. On the daily chart, it's under the cloud currently. Okay, so I'd hold off on SoFi, obviously. And folks, that's going to do it for this video. Thanks for watching. Don't forget to like and subscribe. It takes 5 seconds out of your day. And yeah, We're about to hit the 27,000 subscribers mark. So I appreciate all of you. Have a great rest of the day. I'll catch you all in the next video.